My name is Brahim, welcome back to the channel, and today we're going to be looking at another Volkswagen article. If you saw the last video I did on Volkswagen, literally the day I uploaded it, Volkswagen's price blew up. I'm going to check that. So there's two different stocks for Volkswagen. You got VOW and then you got VOW free. Now the difference is, this one is the ordinary shares, whereas this one's the preferred shares. So this was the trading day of yesterday, the 16th of March. On its high from open, it went up 24%. Probably higher because I don't know the actual opening price. And the actual peak zoomed into like the exact second. But you can still see 24% return. And overall the whole day though, it finished up 11.8%. That's the ordinary shares. The preferred shares went up about 6%, maybe higher, and finished overall 4.91%. Now, it's a bit funny. Literally just talking about Volkswagen and then the next day, boom, it happens. Now I'm going to read this article which kind of goes more in depth about their batteries that they're thinking of having for their electric vehicles. Volkswagen revealed a lot about its battery plans today. I'm going to try and adequately summarize here what it said and what that means. I'm sure it won't be a perfect analysis, so feel free to help me out down in the comments with what I missed or perhaps even got wrong. I'm including 2 dozen screenshots from Volkswagen's presentation here. Overall, the message seems to be the same as Tesla from the Tesla Battery Day. A series of different steps will together bring down batteries costs by 30 to 50%, and in some cases the steps seem to be identical to what Tesla presented last year. Here's a comparison of Volkswagen's summary chart on how it will cut batteries costs and a GIF of Tesla's explanation of the same thing that our channel and both put together using 5 Tesla Battery Days image. How to reach cost targets: cell design minus 15%, production process save 10%, cathode and anode material minus 20%, battery system concept minus 5%, cost up to 50% less. And then key takeaways: technology roadmap with possible unified cell utilization of 80%, action fields to achieve cost targets defined, closed loop process installed, solid localization strategy to secure volume and timing, battery cell and system, reaching cost targets with unified cell concept, entry minus 50% inexpensive chemistry, volume cost minus 30% mainstream chemistry, specific solutions cost now says X amount and an increase, high-end chemistry for high-end performance, variety in cell chemistry, variety in chemistry and decision. Overall, Volkswagen intends to reduce battery cell costs in low-cost entry-level vehicles by 50%. Much of that cost reduction coming from a switch in chemistry that Tesla has also undertaken from its lower-range Model 3 produced in China. I'll come back to that in a minute. Mainstream high-volume electric vehicles will get a 30% battery cost reduction without such a hit to the range. Just to make one more generic point, it's clear Volkswagen put a ton of work into preparing this presentation, including several shots from inside or above factories and numerous pre-recorded presentations from different executives in the corporation. This brings a lot more transparency to what Volkswagen is doing and I think raises investors' confidence. I presume that was a key part of the impetus for this overall presentation or Power Day. And the person put full disclosure, they own shares as well, whoever wrote this article. From an Eagle's perspective, Volkswagen is planning 6 battery gigafactories of 40 gigawatt hours, each in Europe, for a total of 240 gigawatt hours of production capacity by 2030. Those of us who have been in the industry long enough probably remember when Tesla first introduced its gigafactory concept. The plan was a 35 gigawatt facility. Volkswagen is now planning 6 40 gigawatts battery factories across Europe. In any regard, if you are an EV enthusiast, I think that's a big score. Even if you're a hardcore Tesla fan, it's important to remember what Elon Musk had said. Tesla, of course, will not provide vehicles for the whole market or even half the market. It's critical that other automakers also have large EV battery plans, and this is the largest I've seen. One key way Volkswagen plans to bring costs down is via simple economics. Increasing battery production volume, that will organically bring down costs. The magic learning curve never ceases to deliver as far as I've seen. But now let's dive into specifics. One key point is that with a unified cell, 80% of Volkswagen battery cell will remain the same, allowing for good economics of scale, planning and predictability, while the remaining 20% will change depending on the application and needed. Few pictures of the design. Going into the same trajectory as Tesla, Volkswagen plans to move from today's cell to module battery format, which involves battery cells being packed into battery modules, which are then packed into battery packs, to cell to pack systems that skip the module step, and eventually cell to cars systems that build battery cells into the structures of the cars. This was a surprise final step announced by Tesla last year. While the cell-to-pack evolution had become common knowledge as a plan across the battery industry, it's unclear if Volkswagen had plans to go this route before Tesla announced it. But either way, I think this plan to be one of the most interesting ones announced by Volkswagen today. Will this work for Tesla or Volkswagen? What's the timeline for this? We'll see. Also, following the same format as Tesla, Volkswagen is going to focus on using iron phosphate batteries in its entry-level electric vehicles in order to cut costs, and it says that those batteries are cheaper, and because entry-level cars can have less range. Iron phosphate batteries don't have the best energy density. Max Holland explained this path at length just before Tesla Battery Day 2020. So I recommend reading that article if you want to dive much deeper into that topic. Following those entry-level batteries, Volkswagen intends to use high manganese batteries with no cobalt for most of its vehicles. These kinds of batteries offer good range for moderate costs. And then the nickel, manganese, cobalt, NMC battery cells for specific vehicle application needs, like high-performance cars. Volkswagen executives also talked about using synthetic graphite in the battery anodes in order to enhance changing performance and speed up trips. You can see above Volkswagen wanted to cut charging time on a 450 km, 280 mile road trip from 25 minutes today to 17 minutes by 2025 and 12 minutes after 2025. The 12-minute charge time is barely enough to go to the bathroom and grab a drink or a snack. Volkswagen did eventually talk about solid-state batteries, which is basically seen as an endgame. Solid-state batteries will decrease charging time even further, and the company claims it is seeing good progress via QuantumScape at moving from R&D to full-scale production cells. But these are still expected in production vehicles a handful of years down the road. Solid-state batteries would also significantly increase range in an electric vehicle for the same cost, presuming all goes according to plan. Couple more diagrams. Volkswagen executives also talked a bit about its supply chain, where it was indicated that it would leave battery mineral supply to others, but that it would have to mix of involvement in battery cell productions. A mixture of producing cells itself, buying them on the free market or partnering with others, like Norfolk. That's the one company we talked about last time. Volkswagen plans to recycle and reuse about 95% of raw materials and battery cells and showed a bit of factory animation to explain how that works. I also wrote about that a bit 5 days ago. As for production, Volkswagen wants to cut the electrode production process down so much that it becomes like printing money. The specific time and cost reductions here are unclear, but the message is simple. Anything else? And then that's the end of the article. So what we know from all of this is basically Tesla's main competitor in Europe is looking like it's going to be Volkswagen. NIO has the Chinese market. Tesla, they're about in Europe and they're about in America, but Volkswagen's coming for a piece of the action and they're going to come quick. They're trying to cut down the cost, make it cost effective, trying to make the batteries better, the road trips faster, charging quicker, so they're really trying to put as much into the vehicle as possible. And of course, they're looking at like a different version, let's say your premium version, where the customer will choose. So cutting costs, that's good. Making it affordable, that's good. And the fact they've paired up with Northvolt for the battery production, and they want to make 6 gigafactories in Europe. I'm looking forward to see that. I mean, of course, the market's already started to price some of this good news in already. I mean, if you look at the chart in 1 year, of course that doesn't help because this is around when the pandemic hit, and this is when it was at its peak. But since then, 185% is up. If you zoom out to the 5 years, just before the pandemic hit. So let's say we go from January, providing and pretending nothing happened, but from January to now, it's up 58%. Of course, in reality, it's up a lot more from a 1 year chart perspective. So if we check the chart, you can see from about this December range, that's the last time it really dipped. Not even much it dipped, it only dipped like what, $6. From then, it's gone up over 87%. I think most of the things that are going to happen in the future has already been starting to get priced in. If you look at the 5 year chart, you can see Volkswagen's at all-time high. Of course, you need to remember, buy the rumor, sell the news, and you can see the market's already pricing in what they think the future is going to hold for Volkswagen. So now probably isn't the best time if you're going to go in for short term. If you're going to go in for long term, maybe wait for a dip. But as you can see, the chart, even if it goes on 1 month chart, it's just getting to a point where it's like, when is it going to stop? Well, where is it going to have a red day? I mean, 3%, 0.7%, and 2.9%, and that's over a month. So over a month, it only went down 3 times, and even then, it wasn't much. And you got some days it's going up 5%, 8%, 10%. It's just going up and up and up. I hope you enjoyed this video. If you did, can you subscribe to the channel? I'm trying to get to 1,000 subscribers by the end of the year. That'd be amazing. We'll see if you like the video. Why not leave it a like? I'll see you in the next one.